Good afternoon, and thank you for joining us today. I'm Taylor Combeluzier, a mining analyst at Red Cloud Securities. Today's webinar focuses on Strategic Metals Limited, which is a successful project generator with a large portfolio of interests in over 120 properties and share interests in other exploration companies through project farmouts, investments, and royalty sales. Since our last webinar with the company, it has been reporting results from 2021 exploration, and it also announced a significant 40% direct ownership position in Broden Mining, which is working with the Ross River Dene Council, a First Nation group, to complete the acquisition of the Vangorda lands, which is a large land package in southern Yukon's Faro mining district. It contains several known polymetallic deposits with historical resources and vast exploration potential. Today, I have with me on the webinar Doug Eaton, who's the president, CEO, and also a director at Strategic Metals. The format of today's webinar will be comprised of two parts. In the first part, Doug will provide an update on Strategic Metals, including its latest corporate and exploration activities. And then in the second part, we'll take your questions live. So please submit your questions via the chat box and we'll get to as many as we can. To start, we'll handle the disclosures and then get into the presentation. So for Strategic Metals, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Strategic Metals corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. For Strategic Metals, I would direct viewers to our research portal for the most up-to-date disclosures. So now I'll turn it over to Doug to update you on the company and what you have to look forward to in the future.
Thank you, Taylor. Good morning, everyone. We'll move through the slide portion of this presentation fairly quickly to give us lots of time for comments. So, as I said, we're involved principally and exclusively, in fact, with North American projects. A lot of partnerships, big investment portfolio, and I think some pretty exciting results pending in the next few months. So we'll move forward here. As mentioned, there's our forward-looking statement. Okay, what are some of the drivers for Strategic? Well, there's numerous. We've got a large portfolio of projects that are wholly owned, about 100, and they cover just about every conceivable metal and deposit type you can think of. Most are in Yukon and northern BC, a couple in the Northwest Territories. What we're really looking to do here is to advance projects, acquire them really cheaply, advance them, and then find partners to move them forward. We've been doing that successfully since the early 2000s. Second point, project partnerships. We've got projects under option to some parties that are making sizable expenditures to earn in. In both the two that are mentioned there on the screen, we've retained the right to hold a 30% interest after the partners make very large expenditures, and there's cash payments that aren't mentioned in that summary. Investment portfolio, right now, exclusive of our interest in Broden, we've got a little over $20 million of shares in other companies. The vast majority of those are free trading, and all of them are for investment purposes. We're not looking to take any of these companies to production ourselves or the projects to production. We want strong independent management to advance the projects. And with the right liquidity situations, we're quite prepared to sell. So a couple of the more advanced projects are Broden, Rockhaven Resources, and GGL Resources, which we'll talk about a little bit more in a bit. And we're still very well financed. We have approximately $7.5 million in cash, no overhanging flow-through commitments, and no debt. And again, we've been successful in operating in northwestern Canada. Management team, very stable group of directors and officers. I think we've worked together very well for a number of years. More than happy to take a look at this slide in more detail later on. Everything here you're seeing is on our website. You can look them up there if you want more information. Okay, right now we've got just under 8 million shares outstanding on a fully diluted basis. Outstanding on a fully diluted basis, that goes up to 127 million. Our market cap is about $35 million. We have about on this slide it shows 21 million. As I say, it fluctuates day to day of shares of other companies. Over the past 10 years, we've made 3 major distributions to shareholders by way of plan of arrangement where they've received shares of new companies. That amounts to $20 million worth of dividends basically to be distributed to shareholders. So that's a little bit unusual for a junior. We have no debt, which is great. Right now, management's got just under 9% of the outstanding shares, Condir 11.7%, Sprott's just under 10, 9.2%, and Ruffer's got 7.7%. So some institutional following, and we've been averaging about 120, 130 shares, 1,000 shares per day in volume for the last several months. So we've got pretty good liquidity compared to some of our competitors. So why are we focusing in Yukon and northern BC? Well, the answer, first of all, is that Northern Cordilleran Gold Province runs right through it. That very gold-rich area extends into Alaska and down into northern BC. It contains about 300 million ounces of gold resources, which is about 10% of the world's total, although it represents less than 1% of the land mass in the world. So it's very, very much enriched. Some very big projects have received a lot of attention from majors in the last few years. We've listed some on the side there, but it's you've got a lot of really big players who've come in and made sizable investments in that belt in the last 4 or 5 years. So it's the kind of belt where if you make a major discovery, you can be rewarded for it very, very quickly. So we like that. Another reason for liking that area is that another major gold belt runs right through there. It's it's a porphyry belt that's part of the Circum-Pacific system. The porphyry deposits extend through BC and down into the southern part of the U.S. and on all the way down through Chile, and then continue into Alaska. In Yukon, there's one porphyry deposit that's got most of the attention. That's Casino. Our group was actually involved with the discovery of Casino back in the late 1960s, and then we played an instrumental role in bringing it back into the focus again in the 1990s. So we've got a long history in porphyry exploration in Yukon. We've assembled what I think is an exceptional portfolio of early stage porphyry targets. Some have had drilling, and the drilling that's been done has been quite positive. Others have very strong geochemical and geophysical signatures that are indicative of porphyry style mineralization. They occur in 3 or 4 belts, which is unusual. Most of the porphyry mineralization in BC is in mid-Jurassic deposits. Here we've got some evidence of that with some of our projects, but we've also got various age Cretaceous and even into the tertiary. So we've got a number of different styles at different erosional levels. So I think that those projects are going to get a lot of work in the next few years. So just to throw a spotlight on a couple, one project that we've got, GK, is located in the northern end of the Golden Triangle, just a few kilometers west of Telegraph Creek. It's very in exactly the same types of rocks that host a lot of the major deposits in that belt, which include Red Chris and Galore Creek and others. It's had very little drilling. In fact, only 2 holes historically, both of which targeted veins on the outer part of what we think are porphyry systems. And as you can see, there are some very positive results: 13 grams gold and 6% copper across 7.4 meters. That was the core of a broader shear zone. So anyway, we think that it's got potential for both porphyry and veins. We went in last year, took some mag data and had it processed, creating 3-dimensional models, and it identified a number of very high-level areas on the property where small intrusions have come to surface and appear to be altering the surrounding rocks. And that's reflected very well where we've done soil geochemistry. You can see incredibly intense gold in the upper slide or upper part of the slide, and copper right below it. Very, very strong anomalies associated with some of those high-level intrusions. And a few years ago, we did a little bit of IP across one of the targets and defined a blind to surface target that's got enhanced chargeability and low resistivity, exactly the type of features you'd expect to see with an alkaline porphyry. Not the eye-crushing type numbers you get with alkaline systems, but very consistent with the type of response you get from alkaline systems, which are the main type of targets in this district. Critical metals, I'm not going to dwell on them too much here, but we have really good exposure. The company's been able to capitalize on about 50 years of exploration that was done in Yukon territory by a consulting group that we're associated with. Identified a lot of what we think are some of the most important projects for the various metals in the north: tin, tungsten, vanadium, nickel, cobalt. We've got a really broad spectrum covered, and we're talking to some people about potentially doing a deal on some of those projects now. Mount Hinton, it's a gold project. Just to give you a taste of what's there. It's one that we did some drilling on, not this summer, but the summer before. Had some very positive results. It's right alongside the Keno Hill district. In fact, our claims are shown in red. The Alexco ground are purple. Eagle is the just up in the top corner. That's, of course, they just commissioned that's Victoria Gold's Eagle mine, which was commissioned last year. And actually, the sliver that sits in between Eagle and Alexco on the west side of the map is where Banyan is conducting a very large program now and has defined 1.5 to 2 million ounces of gold in the last year or so. So it's a prolific belt, lots of exploration potential, lots of new discoveries still being made, and we're very optimistic going forward that there'll be news out of that one in the next few years. Hopper, that's a farm out that we did with a company called CAVU. They announced some very positive results this year from both skarn and porphyry exploration. 5 of their holes tested skarn zones, and they got some very positive results from that drilling. In fact, the best hole that's ever been drilled on the property was that from this year's work. As you can see from the geochem slides, the Hopper target is enormous, and in fact, it competes very well with the anomaly that defines the Casino deposit, where there's more than 2 million tons of metal. So, we very optimistic that if CAVU continues to explore, they'll find lots more. As we said before, they've got to spend $5 million to get to 70%. They also have to pay us $700,000 in cash payments and issue us 500,000 shares. At that point, we'll retain a 30% working interest. So hopefully they'll continue to get good results, and there'll be lots more to hear on this one. So what else do we have in the portfolio? We talked about some of the drivers before, and I'll kind of go around them from top to bottom clockwise. Rockhaven Resources, we've got just under 32% of that one at the present time. They're in the midst of a major exploration program. They haven't announced the results yet, but we know that there's lots of news to come in the next few months. They did a PEA last year, which showed very, very positive economics. And the work that they're doing now is prelude to, I think, a new resource calculation, which will then lead into hopefully pre-feasibility in the next year or so. So we're bullish about what they're doing. I think there's lots of room for expansion on that project. It's already a 1.6 million ounce gold equivalent resource, but I think it's got lots of room to grow. And we look very, very encouraged by what we've seen. Terra CO2. Terra is a company, it's a private company. It's registered in the US and Delaware. They're working on an alternative to Portland cement. There's some very tight regulations we have to operate under in terms of disclosure, but I can tell you that they're making good progress. They still anticipate commercial production commencing next year, and they've got their first major patent, which covers their core technology, has been approved. They've many more in process. So again, we think that could be a real disruptor in the cement sector, which for people who follow it, the cement business is a bigger business than all mining combined. So hopefully they're successful. We own 22%. I actually was the founder of the company, so we've got quite a good understanding of what they're doing. GGL, we've got 39% of GGL. They've been long known as a diamond explorer. They've also got an interesting project at McConnell Creek in northern BC near Camas. But what they're focusing on right now is the Gold Point district in Nevada. There will be news releases shortly on that one. I believe they've reached the point where I think they've got their ducks in line, and they'll be telling the world about it. So keep tuned there. Honey Badger, we've got just under 20% of Honey Badger. We sold them 3 of our silver projects last year, retained an NSR and everything except silver when we did that deal. It's Chad Williams, very successful promoter, is the CEO of the company, and we're working with them to help build that company, and hopefully it'll do really well in the next few years. Silver Range. Silver Range was one of our spin-out projects. They was dividended out to shareholders. We got just under 19% of that one, and they're a project generator working Nevada, Nunavut, and Northwest Territories. Their main focus right now is Nevada, and they've got a lot of projects under option, so they're in good shape. Precipitate recently changed their focus from the Dominican, where they were running into some issues with land tenure problems, but they're now working in Newfoundland and are quite aggressive about what they're doing there. And we've got, again, just under 20% of them. And finally, Broden Mining. Broden's the one I've got to talk to the most on, in that I think it's really an exciting project. We've got 40, or had a 40% interest. It's a private company. They've just completed a financing raise just under $4 million. That diluted us to around 36%. The underwriting was done at the hard dollars at $1.50, and the flow-through component was done at $2.10. They'll be spending that money on finalizing their agreements with Canada. I know they're very close to signing their final agreement. In addition to that, they'll be spending money on a drill program, which will allow them to confirm the resources that are already defined. There's about 400 some holes into one of the deposits. They just have to drill a few confirmation holes. That will allow them to produce a PEA, and the expectation is that with that in hand, that they'll go public sometime, probably Q2 next year. We think that the upside in this thing is enormous. As you can see, there's already some very sizable amounts of metal in the deposits that are known on the ground. Some of those are 43-101 compliant, some aren't. Right now, there's over 5 billion pounds of zinc, 3.5 billion pounds of lead, 111 million ounces of silver, and about 870,000 ounces of gold in those resources. But they're going to be subject to change here, and I think they'll be going up. We'll have to keep our fingers crossed on that one. The other thing in that district that's important is a very large land package, and the exploration potential on it is exceptional. The mine that operated in the Faro district before was the largest mine it's ever operated in Canada, one of the largest lead zinc mines in the world when it was in operation previously. The Faro deposit, which was mined out, is in reclamation and remediation. It's under the control of the federal government. The deal that we have does not include the mined out area at Faro, nor the tailings, nor the old mill site. We've got the rights to deposits on what's called the Van Gorda Plateau, and lands further to the east, and ground that we acquired from Silver Range Resources to the north. So we're not taking on the environmental liability for reclaiming Faro. That's an important consideration here. The deposits, as I said, have got a lot of expansion potential. They were modeled principally for their lead zinc potential in the past. We now know that there was a lot of silver and gold that wasn't appreciated and wasn't properly accounted for in the metallurgy. So we think that the value is really going to be increased. And again, the exploration there, they always had at least 20 years of mine life in front of them, so they never bothered to follow up a vast number of geophysical anomalies that have been defined elsewhere on the property. So the potential for new discoveries and expansion of existing resources is exceptional. So very excited about the Broden investment. So upcoming catalysts, just to review, I think we're going to do more deals on our projects. We've announced some of our results and had some pretty good attention to them. Very positive results, especially from some of our porphyry projects. Rockhavens will be making news releases regarding their drilling that they did this year. GGL will be talking about some drill results they have and some changes that have taken place at Gold Point. Terra, well, they're going to keep working toward production. And ultimately, I think we've got a fantastic opportunity in this market. You wouldn't think so today, looking at what the markets have done, but I think going forward, things will stabilize, and I think we're in a good run here for metals. So we're in a sweet spot. So with that all said, I think I'll turn it back over to you. We'll hop way ahead here if you don't mind. We don't need to look at any of this. Just advance it all the way through and tell the world how to get a hold of Richard and I. Anyway, Taylor, I'll turn it over to you and let you take any questions.
Perfect. Sounds good. So thank you very much, Doug. So we will turn to the Q&A portion of the webinar, and a reminder to everybody on the line that you can type in your questions to the chat at any point. So we have had a number come through already. So I'll start off with the first one here. Strategic Metals just renewed its issuer bid last year. That bid was in place even when the share price was near 52-week lows. You didn't buy any stock back. Why not?
Okay, we've done that. We've done buybacks before, but the theory is that market will value us the way they want. But where we've done actually stepped in and bought shares is when the share price has collapsed to the point where the share price or the market cap of the company was less than the cash on hand. In other words, we were buying $1 for less than $1, and then all the other upsides were blue sky. The reason we didn't step in and buy shares last year is basically that if you spend the capital that you've already raised and then have to go out and replace it at some point in the future, you're in a situation where you're going to have to pay finder's fees. There's legal and securities fees that have to be paid. So the feeling is that it's not a good use for capital. But if it gets to the point where you can actually buy $1 for less than $1, then you've got to take advantage. So we keep it in place in case there's just a market collapse, a Black Friday situation where there's just no support for the market. We can actually buy back shares at a crazy low price. It's just keeping it on hand as another tool in the chest.
Perfect. Okay. Another question related to valuation. Just wondering if you could compare and contrast your current valuation versus its potential and relative to any other time in Strategic's history.
Well, I can summarize that in two ways, and I'm going to do one that's a little bit cheeky to start with, and that's that if somebody looks at the insider trading reports, you'll see that in the last couple of months I bought about 1 million shares of round numbers. Clearly, I think it's grossly undervalued. I think that, for example, if you bring in the price of the Broden financing at $1.50, our 5 million shares are worth about $7.5 million. Well, you stick that on top of the approximately 21 that we've got in other companies, and you're 28.5. Basically we have almost full market cap from just the shareholdings alone. It's forgetting the cash on hand and the projects that we have and the royalty interest. So yeah, I think we're grossly undervalued. I think that as this Broden transaction advances, and hopefully as we see some just a general pickup that typically you see in spring. I think that you're going to see, the value of those assets increase even more. And I don't want to put a number on it, but I can certainly see the potential for a double from where we are without too much trouble. It's, I think that we'll see the value of our assets increase quite substantially in the next few months.
Right. Okay. And just sticking on Broden a little bit, you talked about it. Just wondering, in terms of kind of strategy for the company, and how has it, redefined, I guess, strategic metals, or how has it impacted the company, I guess, in terms of its focus?
Well, a couple things. Because of the Broden transaction, suddenly I think we're in a situation where if we can have Broden execute the way they intend to, and I truly believe they will. And just for full disclosure, I am represent strategic on the Broden board and also on the operating company that Broden is in partnership with the Ross River Denny Corp on. So I've got some insights into what's planned and where they're going. I'm very optimistic that they'll be able to accomplish what they're setting out to do. I think that if you look at where we are now in terms of number of shares outstanding as a company, Broden that is, and strategic share of those shares, in 6 months' time, I think we're going to be at IPO able to raise all the money that they need to get to feasibility. Because of the huge amount of data that's already available to us and the quality of the data, I think that they're going to be able to produce that feasibility much more quickly than is typical. I don't think there's going to have to be a lot of additional drilling done. I think it's going to be mostly filling a few holes on optimizing metallurgy and site design. I think we've got potential to be putting in permit applications within a couple of years, and because our partner is the local First Nation, and they very much view Broden as a brownfields project, not a greenfields project. Nobody wants to see new roads into areas and over hunting. Nobody wants to pollute an untouched watershed. This isn't that kind of situation. This is an area that's already heavily footprinted, if you want. It's got all the infrastructure you'd want. It's got power lines running to it. It's got a major haul road going down to the Port of Skagway. It's a community that once had 2,000 people living in it. It's now got about 300. So it's grossly overbuilt in terms of its resources. You can drive whatever you want to drive right to any drill hole we're going to be drilling the next little while. It's a very optimized situation. And the First Nations, Broden has done a deal with them, which is going to really be a game changer for the local First Nation. They've got lots of opportunities to participate in many ways, right from employment through service contracting, you name it. There's lots of opportunities there. And they've got an NSR situation that's very similar to the one that's at Red Dog. So, they could be huge financial winners out of this. So, and social winners. I think it's going to be very, very good for them in many regards. So it's a deal that I think is a win-win-win for Canada. It's a win for Yukon. It's a win for the First Nation. And I think it's going to be a massive win for investors as well.
Okay. And then in terms of, I guess, on the strategic side, obviously you mentioned the, your involvement on the board, obviously the equity ownership position. In terms of strategic, does this position change at all the mission of Strategic Metals in terms of project generator? And
no, I don't think it doesn't divert us off of that, because it's a passive investment for us. That's the beauty of all of our share positions. In every case, we've got independent management running it. I'm the CEO of GGL as well as Strategic. That's the only one where I have a role as an officer. But we have a very strong president, and Dave Kelsch, who's the president, really runs more of the day-to-day operations than I do. And my role probably would be better executive chairman or something. I don't try to muddle too much with day-to-day operations. So the whole idea is to let other people do a lot of the work for us and build value for Strategic, while we try to focus on getting projects out the door. It's the type of activity that keeps the lights on, keeps things going, gets us lots of opportunities, lots of insights. But I think that we could go through an evolution here in a few years if the right things happen. If we go into a strong market and we do lots of transactions, we may morph backwards as part of our operations into a very substantial royalty company. With all of those property interests, we could end up with 50 or more royalty interests in the next few years, which then either become a potential source of a pretty good buyout or sale, if you want, to another royalty company, or it might lead to us splitting the company. We're always looking for creative ways to create value for the shareholders and unlock some of the value that we think is in the company.
Yeah, lots of exciting opportunities and possibilities in the future for sure with this. Okay, turning to the next question. Does Strategic have any involvement in the ongoing deal with the Northwest Territories selling of the Mactum property in the former Cantong mine?
I'd rather not comment on that one.
Okay. What do you see as both, you kind of covered this, but I guess actually we did just kind of discuss this one, just talking about long and short-term kind of catalysts for the company. I don't think there's anything else.
No, I think we've hit the main things. I really can't. We're always working on different opportunities, but there's nothing else I would say is more important than the ones we've mentioned.
Yeah. Okay. In terms of turning to Rockhaven and the says here Strategic Metals has increased its ownership percentage. The stock is down right now, obviously. What do you see in Rockhaven that the massive Canadian investors do not? What kind of results could move the needle on that?
Okay, well, there's a couple things there. One is Rockhaven has a very developable property in as much as, again, the infrastructure is there. There's roads right to it. It's not very far off the grid, or if they put their own power plant in, they wouldn't have to, of course, worry about that. It's in a disturbed area, so it's largely seen as brownfields because of all the placer activity that's occurred in that area. And there aren't a lot of the environmental concerns that some other projects have run into. There's no major caribou concerns or anything right up the area. And it's unencumbered by royalties. The resources that they've defined are mostly suitable for underground mining, but there are some pits that they can get started on. And as the price of gold, silver, lead, and zinc increase, the relative proportion that could be open pit mine obviously is going to increase. And that could have really important implications on their front end economics, which of course drives the ARR and ultimately will enhance the MPV as well. There's also a new area that they discovered. There's two other areas that they're working on. One is the Rusk zone. They've got mineralized bands there, or mineralized veins there, that are seem to be thicker on average than what they're mostly working with. And if that proves to be true, we've got to get assays and whatnot. I think that they've got another area that could contribute significant open pit resources, which again will help their overall economics. They've also got an area that they call the Eastern Zones, which have a little bit different metallurgy. The gold there is cyanidable, and some of those are more conducive to open pit. And again, they'll have to factor those in as well. So there's not only ways that they can increase their resource, but they can change the mix for earlier production and defer some of their underground development costs, which pushes their capital costs up. They can defer those for a few years potentially. So we got to see what kind of results they get, and then the engineers have to play some games with it. But I don't know of very many projects in Canada that have got as many ounces in place already as Rockhaven does, that are still almost completely open to expansion. Rockhaven is still discovering new vein zones. The existing zones are open to depth. In fact, many of them are open along strike as well. There's lots and lots of room to expand the resource there. I've said it a number of times, and I'm going to stay with the same comment. I personally think there's going to be more than 5 million ounces in that deposit by the time they're done. And so, it's one of these things where they've, there's two ways you could go. You could spend tens of millions of dollars on additional drilling and add more ounces, or you can move toward production with what they have. And I think that's the route they're taking now, is to get into the permitting process, show that there is the local support for a mine, and move forward, and not worry about drilling off some of these more distal resources and more difficult to access. The focus, I think, will be on areas that can be mined in the near term. So I think that answers the question. But if somebody wants to follow up, they're more than welcome to give me a call.
All right, yeah, and I'll keep my eyes out for any that come in through the chat. Turning back to Tara, this again, I know you can't say too much on this one, but maybe just clarify for this person who's asking. But does Tara have a go public plan or need further funding to get to commercialization?
They're still, again, I'm not privy to every aspect of their current financing, but they raised a little over $9.2 million, late last year. I know that they haven't spent even half of that yet going forward, and I know that they're looking at doing joint ventures. So again, without knowing the ins and outs of what they've negotiated, I can't say whether they'd have to raise more money or not. It could well be that the partners that they're bringing in are putting up a large chunk, if not all, of the equity to actually construct the plants. I know that Bill, the CEO, is very well connected in the industry, and I think that he'll certainly be looking for that type of deal, where it's possible. Whether they have to raise a little bit more, I can't say. We still, Strategic has, in addition to our share position, we've got 5 million warrants, which would allow us to increase our share position by another 50%. So if they do raise some more money, our warrants are at the same price they raised the last tranche at. So I find it hard to believe that they're going to be diluting themselves at a price below where the last raise was. So presumably we may want to exercise those warrants. They're good for another year or so. So I think we're in pretty good shape there. We just, like I said, you've got to keep our fingers crossed and hope that their technology is working as well as it seems to be.
Great. Okay. We have another question in on regarding the pending results for GGL. We were discussing this before the webinar in terms of the backups at the labs and that maybe you can comment on that.
It's part. We drilled last spring, and for a long time, of course, we were caught up in the same delays that everybody is. But I can honestly say we've had the results for a while, and we have certain initiatives underway, shall I say, that we don't want to release the results until our efforts are complete. I don't want to be any more specific than that, but we felt that we have an exploration advantage that we want to take advantage of, and but I think we're nearing the point where that'll be done. To give you an idea, we've got a geologist who's going to be speaking in Reno at a conference on the 8th of December. So there will be a news release before that, come hell or high water. We want to clear the deck, but we've been working on a couple things for quite a while, and we just want to get them completed. And when that's done, we'll tell the world what we know.
Great. Okay. And I think that rounds out all the questions that have come in. So, Doug, did you have any other final words for viewers before we sign off here?
No, just that I'll go back to someone's question. I think that we represent remarkable value at the present time, and I've been doing this now with strategic since the early 2000s, and as a geologist for 50 years, and I don't think in no, I don't. That's not. I don't think. I know that we've never had a portfolio of projects, either the wholly owned projects or the share interests. We've never had the kind of strength we have right now. So, and again, we're really well funded. Next year, our exploration commitments to hold all of our land are really minimal. This year they're a little bit bigger. Next year they're nothing to speak of. So we've got the ability here to sort of let things develop for a little bit, and I really encourage shareholders to keep a close watch not only on strategic but the related companies, and follow links that Richard provides to them that would take you to the other people's news releases, because a lot of the most exciting news may be secondhand to us. So
great. Okay. We actually did have one last question come through. Should be a quick one. Do you see any potential right now for acquiring additional diamond resources?
Well, I would only do it through GGL if we did. I think right now there's lots of potential to do it, but unfortunately the diamond market hasn't been great the last few years, and there isn't a great deal of interest. For example, Arctic Star announced some pretty interesting results near Lac de Gras, and their stock really didn't respond well to it. So that's why GGL is backed off on the diamond part of it. Dave Kelch is a really knowledgeable diamond geologist and really follows it well. I think when the time is right, I think we'll make another foray in, but I don't think it's the right time right now.
Right. Okay. And I think I missed this one earlier, but maybe you did touch on this in the presentation, but just for this viewer, maybe reiterate what work was carried out at Mount Hinton this year.
Mostly surface work. We'd hoped to do a drill program, but the group that optioned the claim didn't come up with their money. So it was mostly mapping, which linked the geology at Mount Hinton to the geology in the Keno Hill District, where there had been some very detailed work done in the last few years that become public record. So that's important, because we now have a much better idea of exactly where we are in the Keno stratigraphy. And there was a lot of surface work that was done with either excavator or by hand. A lot of the vein systems on the property were documented historically, but they were never GPSed with enough accuracy to be able to use them for drill purposes. So we spent quite a bit of time this year remapping and reprospecting and resampling a lot of the historic occurrences to make sure we know exactly where they are and how they relate to each other. There were something like 75 known vein occurrences, but when you reconstruct them, many of them end up being segments of the same structure. So, and again, if you're going to be drilling for targets that have got grades that are typically exceeding an ounce per ton in gold, and in some cases several hundred ounces of silver, but over widths of 1 meter to 2 meters, you want to make damn sure you know where you're putting the hole, especially when there's strong stratigraphic controls as well as structural controls. So the tendency is that when you're in a brittle unit, they're well developed. You get into a phyllite unit, it's a little bit more ductile. They tend to pinch out a bit and often deflect. So it's really, really important that you have a good idea of where the structures are headed and where what the stratigraphy is doing before you drill. So that's what we basically getting our ducks in line for a more aggressive program next year.
Perfect. I think that was a great update for viewers today. So thank you very much, Doug, for taking the time to host the webinar today with Red Cloud Securities. And thank you very much to everybody on the line for tuning in with us.
Thank you very much. Thanks, everyone.